Next is Amgen. Now, this was a stock that we've been buying very aggressively over at Vestact for client portfolios, so we're naturally going to be smoking hot about it. This is biotechnology, okay? So this is not taking chemicals and mixing them together to make pills. This is where you actually create live cultures using, live cells which produce other drugs. Their biggest and top sellers are drugs that have to do with blood clotting and blood cell stimulation, both red and white. So that's drugs like Neupogen, EPO. That's the stuff, again, that cyclists are not allowed to take, but that everybody gets if you're in a post-chemo type situation. Enbrel, Repatha. Repatha is a new one, which is a PCSK9 inhibitor, which is what people will take if they can't get the required response to get their cholesterol down from the regular drugs, the statins that everybody else takes. You know, you'd swear I had a pharmaceutical degree.
I was just about to say, I feel like I sat through a chemistry class. I was never very good at chemistry.
Damn, pretending to be doctors. $113.18 billion. So smaller, but still a pretty hefty player. Price to earnings ratio 16.61. Dividend yield, so not an out-and-out hotshot not paying dividends. It pays dividends, 2.65%.
I think in a US context, that's pretty solid dividend yield. And it's fascinating how big these companies are. You know, it's hard to contemplate $120 billion. And I think their net income for the year, they recently had results, was about $8 billion. Revenues of $21 billion, so very high margin business. 19% of those revenues spent on R&D, because this is obviously very important for a business like that. There are certainly risks. You know, a lot of the biosimilar type products coming through.
So biosimilar is like the equivalent of a generic, but for these biotech
stocks.
So somebody works out how to make it and makes it in the same way, and that is then a challenge.
Still using genetics of animals and so on.
But it must by extension be harder to copy these drugs, because they're not just, you know, hammered together in a big mixing pot. It's actually something, you know, that Neupogen gets made from the ovaries of a Chinese hamster. They take the outer part of a Chinese hamster. I'm not joking. I can hear people laughing in my ear here. They then take it and they cut bits of it, and then they culture it, and then this stuff grows on those cells, on those cell tissues.
So you can imagine that's pretty hard to copy. But again, there are, you know, talks of some drugs coming off patent, and because there is that biosimilar competition coming through, you can see the fundamentals look pretty attractive. You know, they made $10 a share, trading at 150. That's 15 times historic. They are growing earnings nicely. They're sitting on a lot of cash, sitting in a sweet spot. I certainly think getting in, and the biotech sector as a whole, you know, has had a great couple of years, but also pulled back recently.
Well, let's look at the share chart, because it's around $150 a share, but you can see there in the second half of 2015, it took a bit of a tumble. So that's what we're talking about, where there was a bit of a general sell-off in this space after a very good year in the prior year.
But this one is like the stable daddy of the industry, whereas the other ones, and what's nice is the diversity amongst the products, because a lot of them will have one blockbuster product that comes through. It gets pushed through by the board. What's the
FDA?
The FDA approved, and then the share price shoots up 40% in a day. You know, these guys have about 6 or 7 very stable brands. So one might fall off, another one might come in. It's not going to have a huge impact and not that kind of volatility.
And they've done that where they've acquired other companies. So Kyprolia, which is their drug for various kinds of cancers, was acquired by buying the company that actually had the patent. Okay, so California-based company, looks good, very hot on this one.
Yeah, very hot.
Excellent, good.